to today's episode of the Simply Financial Podcast. I'm your host, Christopher Calandra. I want to increase your financial IQ with today's episode, which will provide an update on inflation, which seems to be cooling. So let me give you some numbers. This past week, the report came out that inflation over the last 12 months for November was 7.1%. This was good news. First off, it was lower than expected. The expectation was for 7.3%, so a little bit better than expected. Also, compared to October, the 12 months for October, the rate was 7.7%. So it came down from 7.7 to 7.1. Even better than that was when you go back to September, the rate was, I believe, 8.6%. Actually, I meant to look that up, but didn't. I'm pretty sure it was 8.6, otherwise something close to that. So it went from, in September, 8.6 to 7.7 to 7.1%. Pretty good progress. Also of note was if you look from October to November, inflation only went up by 0.1%. Very, very small increase. So this is some good news on the inflation front. Again, inflation seems to be cooling. I had a conversation yesterday with a good friend of mine, John, and he talked about how he doesn't see it. He's in the construction field and he sees that his raw costs, the cost of him doing business, are still high and still going up. And what I shared with John is, yes, that seems to be accurate because there are some areas that are contributing greatly to this decline in inflation, and other areas seem to be at this point stubbornly high. So a few examples: housing prices have declined. That's contributed to the cooling of inflation. Used cars have come down, the prices. Energy costs have come down to the point where gas now is a little bit less in most states than it was 1 year ago. So that's the good news part of inflation coming down a touch. But there are still areas, like I said, that are stubbornly high. Talked about the raw goods in the construction field. Another one is grocery prices, which are up something like 12% over the last year. So it's not all good news, and it depends on what categories you're looking at that would really influence your perception of where inflation is. The next thing I wanted to mention is Treasury Secretary Janet Yellen in mid-December, before these numbers came out, had expressed confidence that inflation will be lower and also hinted that it might be short-lived. Now, I kind of feel like you could make a good case that inflation will come down faster than expected. So I took note of Janet Yellen's comments because I kind of buy into that thesis, increasingly buy into that thesis. To be fair, though, she was terribly wrong in 2021, as was the rest of the Biden administration, as was the Federal Reserve, when they talked about inflation not being an issue. They used the term transitory, which is short term for temporary. So she was very, very wrong. She could be very, very wrong again. But like I said, I kind of feel like that might be what plays out, a situation where inflation comes down faster than expected, which would be very good news for the country, for the Biden administration, for the economy, and probably for the markets as well. So this led to the Federal Reserve meeting again last week. They raised interest rates again, a 0.5 percentage point. They did this 0.5 percentage point is a dialing back of the pace that they had been on, where the previous 4 interest rate hikes were 0.75% increases. So this time, 0.5%. Now that's still very aggressive, very aggressive. To put that in perspective, in the last 22 years, the Federal Reserve has raised interest rates more than 0.25% only 5 times. All 5 of those times were this year. So that highlights how aggressive they are this year. So the Fed funds target rate now is between 4.25% and 4.5%. This is the highest rate it's been since December 2007, some 15 years ago. Chairman Powell also indicated that with this interest rate hike, the expectation is for ongoing increases as they try and get inflation under control. What the Federal Reserve is trying to do, which is difficult, is thread the needle. They want to get inflation under control, and they want to do that quickly. They also want to avoid a sharp recession. Now, this is definitely something to watch, these two things. Can we get inflation under control, and can we avoid a sharp recession, a situation where we do a lot of damage to the economy? The jury is still out as to how that will work itself out, but there's a lot at stake here. Let me point out, a very high number of economists are expecting a recession next year in 2023. So that's a little worrisome. I saw reports that the number of economists expecting a recession are higher than on the eve of the Great Recession back in 2007, 2008 time frame. Now, the Federal Reserve has forecasted that with these rate increases and with their fight against inflation, that unemployment will go up. Unemployment's about 3.7%, and they expect it to go to 4.6%. So that's the destruction of economic growth that is causing fear that we will get a recession. It's purposeful. The Fed is raising interest rates so that they could slow economic growth. To make that happen, they're going to have to create more unemployment. So incredibly, the Fed, when they get news that companies are laying off people, and you're seeing more of that in the press today, especially in the tech sector, that actually is good news, sort of, not for the people that are losing their job, but because it will show progress in the Fed's fight against inflation. I'll also point out, now they could be completely wrong. They could be completely wrong, as they were in 2021, but they expect that once they get the Fed funds rate higher than it is now, because they expect it to go higher, they do expect in 2024 and 2025 for it to begin trending down. So their expectation is that they're going to have this fight, they'll win the fight, and then rates could come down. By the way, the Fed target is 2%. So we're well above that today with the 7+% inflation we've been seeing. But they are optimistic they're going to win the fight. It's hard to bet against the Fed. Again, I'm kind of confident. I'm kind of optimistic that this inflation will come down faster than expected. So keep an eye on that. Here at Elliott Wealth Management, the team and I are watching this closely. This is the central economic issue for the time being, inflation and the Fed's activity in trying to bring down interest rates. As I've said before, this isn't really meant as a political statement. The Biden administration is not really part of this fight. In fact, I think most of what the Biden administration is doing runs counter to the Federal Reserve's efforts. So the focus is on inflation and the Fed's activity to bring down inflation. I hope you found this update to be valuable. I'll be back with you on the next episode of the Simply Financial podcast very soon. In the meanwhile, check out my site, elliottwealth.com. You could find out more information about me and the team. You can sign up for a complimentary consultation, see how we work with clients, how we help them win with money. So please check that out. Again, I'll be back with you very soon on the next episode of the Simply Financial podcast.
The views expressed are not necessarily the opinion of SagePoint Financial Incorporated and should not be construed directly or indirectly as an offer to buy or sell any securities mentioned herein. Investing is subject to risks, including loss of principal invested. Past performance is not a guarantee of future results. No strategy can assure a profit nor protect against loss. Please note that individual situations can vary. Therefore, the information should be relied upon when coordinated with individual professional advice. Please note, the information being provided is strictly as a courtesy. When you link to any of the websites provided here, you are leaving this website. We make no representation as to the completeness or accuracy of the information provided at these websites, nor is the company liable for any direct or indirect technical or system issues or any consequences arising out of your access to your use of third-party technologies, websites, information, and programs made available through this website. When you access one of these websites, you are leaving our website and assume total responsibility and risk for your use of the websites you are linking to. Securities and advisory services are offered through SagePoint Financial Incorporated, member FINRA SIPC. Insurance services offered through Elliott Wealth Management, LLC, not affiliated with SagePoint Financial.